Hi there and welcome to this edition of Startup Central. I'm Nayantara Rai. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption, entrepreneurship. Basically, if it falls under the gambit of the new economy, it's going to be here on your favorite channel, ET Now, every weekday at sharp 6 p.m. We might be seeing a sell-off in tech stocks on Wall Street and even in India, but the private markets are working in a completely different orbit. With that, I'd like to invite my next guest. It is a co-founder and CEO of Razorpay, Harshil Mathur. Why are we getting Harshil and Razorpay today on ET Now? Because Razorpay has done the unthinkable. Its valuation has zoomed 7.5 times in 15 months. In April 2020, it was valued at $1 billion. Earlier this year, it was valued at about $2.5–3 billion. Now it is valued at $7.5 billion in December 2021. It's raised a massive $375 million in a new fundraiser. Harshil, welcome to ET Now. Congratulations.
Hey, Nayantara, thanks so much. I think, it is a big raise, but a lot of credit for it goes to the amazing team and the ecosystem that has supported us.
Harshil, your valuation has zoomed 7.5 times in 15 months. Can I put it as crudely and ask you, has Razorpay grown 7.5 times in 15 months to justify this?
Yeah, definitely. I think that's the only reason that our valuation and everything else grows, right? Like we are a B2B org. Our valuation and everything is based on our unit economics and our business metrics. So the primary reason for our scale up valuation and fundraise and everything is because the business has grown incredibly during the last 2 years. And I think the fundraise is just a reflection of that.
So, Harshil, for all of those who don't know Razorpay, it's very difficult to believe that they don't, but you are powering digital payments for SMEs where you not only process it, you also disperse the amount, accept the amounts. You also generate WhatsApp links, email links to make it, a very simple process. You're working with some of the largest companies out there. You work with 8 million of them, which includes Zomato, Swiggy, Meta, formerly called Facebook Group. The question now is, what next?
Yeah, I think one of the primary reasons for our growth has been that we are the largest provider of payments for internet businesses in India. And a lot of scale up for us has happened because the internet ecosystem has scaled massively in the last 2 years in India. So, like to give an idea, like out of the 42 companies that became unicorn in India this year, we power 34 of them. So that just shows the impact that Razorpay has had on the ecosystem. Coupled with our scale up on the banking and lending side in the last 2 years, where we have coupled and provided banking and lending services to internet businesses, I think we are building a full stack financial platform for internet business in India, where a business can sign up with Razorpay in the next couple of years. We want to get to that point where a business can sign up with Razorpay and we take care of everything from payments to banking to lending to everything that they need in terms of managing their finances can happen on Razorpay as an ecosystem. And I think we are still fairly early in that journey. I think we've scaled payments a lot. We have seen some early traction on banking and lending, but there's a lot of room to grow. There's a lot of depth to be covered.
Razorpay, may have a consumer focus, but it's in B2B. It ends up helping consumers. So when you talk of a full stack financial player, will it still be with this ethos?
Yes, so we continue to be very strongly focused on B2B side. I think there's a lot of opportunity on the business ecosystem side, and I think there's not a lot of work that has been done in India on the B2B side. I think the way businesses manage their finances is still the same that used to happen 10 years back. And technology and the broad ecosystem hasn't penetrated that side much. So we have a lot of things that we need to do on the B2B side. And at least for the next couple of years, our focus will continue to be very, very strongly on the B2B side of the ecosystem. We can add a lot of value there. We understand that ecosystem very well. And more importantly, the unit economics is very, very strong there.
I remember interviewing you recently where you did reveal that the total payment values in early December had crossed $60 billion. Your target is for $90 billion in 2022. But Harshil, my antenna's gone up when you said lending. What are you planning for lending?
Yeah, we launched lending about a year and a half back, and today we do about 600 to 800 crores of dispersals through our platform. We basically play a tech platform approach there. We connect with lenders on one side, which is banks and NBFCs, and we have an ecosystem of merchants on the other side. And we help the merchants get access to loans, and we help the lenders get access to these merchants. And we have seen a lot of rapid scale up on this because in the last couple of years, a lot of these small to mid-sized internet businesses have scaled massively. But even today, lenders are unable to underwrite them. So we are using Razorpay technology and the data that Razorpay has about the ecosystem to give them access to the pool of internet merchants who cannot be underwritten by traditional means. And for example, we also launched a corporate credit card product last year. And today we are the fastest scaling corporate credit card product out in the ecosystem because we are able to give a corporate credit card to an internet business right on day one. So I think those are the kind of lending products that we'll continue to add. The goal being how can we make credit easier and more accessible to internet businesses in India.
You're saying you're the fastest scaling corporate credit card that's out there in the ecosystem. Harshal, with that, I want to come to my next question. And this is a larger question as far as fintech goes. In the 1990s, Bill Gates actually said, we don't need banks, but we need banking. I think a lot of us in the 1990s, I was still very young, but a lot of people felt, what's he talking about? But it seems the prophecy is coming true. A lot of questions are being raised about fintechs maybe stealing market share from banks. There are those that believe, that's a pipe dream. It's only going to make the banks become more agile, more tech-enabled. How do you see all of this?
Yeah, I think I partially agree with that statement, but I'd like to add. I think fintech is an ecosystem of collaboration. There's a lot of value that you can create just by growing the pie. You don't need to keep fighting each other. Like it's not that kind of ecosystem that I have to take market share away from somebody else to really grow. It's at least in India, the penetration of finance is still very, very early. The penetration of digitization is still very, very early. The penetration of banking itself is fairly low. So I think there's a lot of opportunity for banks and fintechs to collaborate and scale. And a good example of that is the products that we have built so far. Most of our products, whether we talk about the credit card or the neobanking side or the payment side, is built in partnership with banks, where banks own and hold the money, and we manage the technical and product integration on the customer side. And I think with that winning combination, we are able to serve customers better, but at the same time provide them the trust and security of a large financial institution like a bank. So I think there's a lot of opportunity where fintechs and banks can collaborate and create a whole new market for both of us, where there'll be opportunity for everyone to share the benefits of that growth. So that will be my belief for the next couple of years.
Okay, that banks and fintech will have to collaborate. They don't necessarily have to compete. In the sense I'm getting is the smarter ones will do that. You've, of course, thrown in your own neo-banking product in that mix, Harshal. Harshal, but we're also talking at a time when you're seeing tech stocks worldwide, including fintech, sell off. In India, the newly listed companies are off their highs. I'm not going to put you in a spot and question you on the Paytm IPO debacle. But what you have seemed to prove is that private markets still were in their own orbit, or fintech is still able to raise really large sums of money. How should one be seeing this dichotomy?
Yeah, so I don't think private markets are unaffected by what public markets do, right? Like it's of course related, because even for us, the goal for the company is to go public someday. It might be 2.5, 3 years away, but it's still at some point we want to go public. So we are watching all of these trends carefully. I think my read of the market is that I don't think the market paints everyone under one brush. The market doesn't look at fintech or startups or tech companies as one category. I think every company is looked at with its own fundamentals, with its own metrics, and that's why even when you talk about tech IPOs, every IPO has performed differently. There's some that has gone really well. There's some that has performed moderately well. There's some that have gone bad. But I think every company has looked at it with its own lens, and I think the retail investors are smart enough to understand what every company does independently and not just look at tech companies or startups in one brush. So I think with that belief, what we are really focusing on and doubling down on is our fundamentals and our core unit economics. And being a B2B organization, we are very, very strongly focused on unit economics right from day one. So our burn is fairly low. Most of the valuation growth and the company growth that you see out is built on top of growth in revenues, and built on top of growth in business fundamentals. And that is something that we continue to focus on, because our goal as well that someday is to go public and be able to show those metrics to the retail investors where they feel that these are the right metrics for the company to chase.
So when do you want to IPO? And no plans being derailed. You're saying you don't paint everyone with the same brush, markets treat companies differently and all of that. But when do you want to IPO? And your IPO plans being determined by what we've seen in recent times, whether it is a Paytm or, even for that matter, Star Health?
Yeah, see, I think, as I said, a market has treated every company in its own. Like you've seen the Zomato IPO, the Nykaa IPO, the Policybazaar IPO. There have been a lot of examples where markets have treated every company independently. So our belief is that, I think, firstly, from our perspective, I think we want to go public when we as a company are ready. And from our perspective, while we have scaled a lot in payments and we're almost breaking even there's still a lot of work that we want to do on banking and lending. And there's still a lot of R&D investments that we want to do there and scale it up to a significant level where we can go public, not just as a payments company, but as a full stack financial services company. So in our belief, we are at least 2.5 to 3 years away from that, where we can go public and present that connected story to the market that, hey, we are a full stack financial services company. And I think, of course, we are watching what is happening in the ecosystem right now, but market crashes and market bull runs are part and parcel of the ecosystem. So we'll wait for a couple of more cycles and see how that goes, and based on that, take the right call. But internally itself, we are at least 2.5, 3 years away from a public offering.
So the new year, what can we expect from Razorpay, Harshil? And I ask you this because in 2021, you really dominated. Like you said, you're powering 34 of the unicorns that were minted this year. You've come out with a slew of products, whether it's to help them with taxes or, to generate simple links. We've been tracking all of that very closely right here.
Yeah, I think, of course, the fundraise is exciting and it adds a lot of fuel to our journey. So we'll double down on what we are great at. So product is something we are a strongly product and tech company. So you'll constantly see product launches from us. We have done a lot of product launches this year. You can expect to see a lot more of those next year. The core thesis being how can we simplify financial lives of businesses even further? And you'll see a lot more product launches around that. Most of the investment that we raise will go into R&D to building these products. On the outcome side, as we have already shared, right, we are expecting a lot of growth next year as well. We are today processing $60 billion of payment volume through our platform, annualized. We expect to scale it up to $90 billion and even more, depending on how the ecosystem grows. So yeah, a lot of excitement ahead for us in the next year, and I'm very optimistic as we step into the new year.
You've said that there's so much to be done in India. You've only scratched the surface, even with payments that you've really, really scaled up so much. Then can I ask you, Harshil, why do you want to spend your efforts going into South Asia when the efforts are so large? I get the logic of it. I also know one of your investors, for example, Sequoia, always says build for India, build for the world. But I'd love to know from you, the co-founder, when the opportunity is so large, why do you want to enter new markets?
Yeah, I want to clarify, India is our top priority, and majority of our investment, majority of our teams, majority of our focus will continue to be in India. That is not going to change, especially given the kind of growth that India is seeing. So we are very, very bullish on India. But at the same time, I think the products that we have built on the payment side, today we are the largest provider of internet payments in India. And a lot of products that we have built in India in the last 7 years on payment side, we believe those products are not just great for India, but for a lot of ecosystem across the world, especially Southeast Asia, where we feel that the problems and challenges are very similar to what India had a couple of years back. And the growth that they're seeing is very similar to what India saw in the last 4 or 5 years. So there's a lot of leverage that we can drive by translating some of those products to these markets and scaling them there. Because I believe the kind of innovation that we are having in India, and that the kind of scale up that we are seeing in India, the kind of talent that we have in India, we should not be just building for India. We should be building for the world. We should be telling the world that this is how payment should be done. This is how financial ecosystem should be built. And I think Razorpay wants to definitely take a lead there and translate a lot of those innovations across the world and see if we can help some of those ecosystems also scale up the way India has scaled up in the last couple of years.
Harshil, in 2022, there's going to be certainly a lot of excitement, right? whether it's the NPCI, which is going to be rolling out its 33% market share rules for UPI. Buy now, pay later is becoming a bigger rage. Lending on top of UPI, we're all, waiting for that. Fintechs wanting to become banks. We've seen, for example, one startup, in fact, do that by tying up with Centrum and taking over PMC. I'm talking about BharatPay, of course. The trends that we're watching with fintech masquerading as banks, becoming banks, does Razorpay have those ambitions?
Yeah, fintech is always exciting every year. Like there's a lot of action that we saw this year, a lot of action that I expect to see next year, and I think yes, it's gonna be an exciting year for fintech as it has been in the last couple of years. On the banking side in particular, I think the Niti Aayog paper that just came out on digital banking, I think was very exciting and very positive. And we get to see how the paper takes shape in form of regulation. Like right now, it's open for comments, and I think we have lent a strong support to that. So if something like that scales up and comes out, I think Razorpay will definitely be excited to figure out a way to be part of the regulatory regime around digital banking. But it's still early for us. I think right now the ecosystem needs to, like the neobank ecosystem needs to prove itself first, and that's what we are also trying to do. Like we power today 25,000 plus merchants on our neobanking side. We want to scale it up a lot more massively next year. I think when the time is right, we definitely want to figure out a way to get directly regulated and be able to scale it on our own instead of being dependent on multiple third parties. But as of this point, I think it's still a little early for us.
Actually, everyone watching it today will be like, wow, look at the valuation. It has zoomed 7.5 times in 15 months. In March of 2020, Razorpay wasn't even a unicorn. It's going into 2022 with the $7.5 billion valuation. It looks so picture perfect from outside. Do you remember your initial days of struggle when you started out in 2014?
Yeah, no. But first of all, I would like to add, like, it's still a lot of struggle every day, right? Like building a startup and scaling a startup is hard, and it gets harder. It doesn't get easier over time. Like even when you raise $100 million or whether you raise $375 million, it adds more and more responsibility, and the ambitions grow bigger, the teams grow bigger. So of course, it's a struggle every day, But I think, of course, 2014 was even more tough because that's when we were starting up. And I remember going to multiple banks, submitting a business plan and getting rejected day in, day out, right? We were rejected by almost 60 to 80 bankers before one person approved us. And we were able to start building Razorpay, right? So every year of the journey or every cycle of the journey has its own struggles. And there have been a lot of times where we have stepped back and said, hey, do we really want to pursue this, or do you want to we want to go back home? But I think it's the trust and belief of the customers that we have always had with us. Even today, right? Whenever I feel okay, there's a lot of challenges and stuff, I go and speak to a lot of our customers, and when they say that Razorpay is adding value to their life, that is the only support that you need. It's the only encouragement that you need that makes you wake up every day and say that we have to build a lot more.
It's, I think advice for everybody who's tuning in. Here's Harshal Mathur, Razorpay, rejected by 60 to 80 bankers, but they believed in their dream, they believed in their vision, they knew they were going to try and disrupt payments, and boy, did they. That's a lesson for everybody out there. Harshal Mathur, what a great way for you to end the year. Thank you once again for taking the time out for ET Now. Wish you and everyone back home a very happy new year.
Thank you so much, Nantara, and wish everyone a happy new year.